I'm Allie Barefoot with Cotality, and this is Data in Context. As many homeowners know, costs do not stop at closing. Month after month, the mortgage payment is due, and these bills can grow larger as insurance premiums rise. For many homeowners, that stress grows even higher as events like hurricanes, floods, and wildfires come into their life. I'm Allie Barefoot with Cotality, and this is Data in Context. As many homeowners know, costs do not stop at closing. Month after month, the mortgage payment is due, and those bills can grow larger as insurance premiums rise. For many homeowners, that strain gets heavier with events like hurricanes, floods, and wildfires. Natural disasters don't just drive premiums higher, they force costly rebuilding, especially for homeowners that want to make their homes more resilient. But Cotality data shares an important story. Homeowners who take the time to mitigate their properties usually end up paying less over time. But is that really sustainable? That's why today we're going to be talking with Russell McIntyre, Cotality's public policy and industry relations principal, and we're going to explore how policy can help mitigate the rise of insurance and lay a foundation for a stable future. So let's jump into it. Russell, thank you so much for joining me on Data and Context.
Yeah, so happy to be here. A fan of the format and happy to, be one of the first videos we get out there.
Oh, thank you very much.
Yeah.
So I'll just go on ahead and just jump into the main question here because it's kind of a reality that is a little bit harsh on a lot of people. And it's the fact that insurance premiums can be very scary, especially when you're looking at all the bills you have to pay and you're budgeting for the month or for the year. So I want to start this off here kind of asking, could insurance affordability become as important of a factor in the home buying process as it does with a mortgage or with property taxes?
Yeah, absolutely. As you alluded to there, when prospective home buyers are looking through the financial implications of purchasing a new home and they're working through their budget, one of their main concerns is how much is this going to cost me on a month to month basis?
Right.
And the recent rise in insurance costs has really thrown a wrench into that calculation. Now, especially in areas with lower median incomes, these cost increases are really squeezing family budgets.
No, that makes total sense. I mean, I have to budget my grocery list, let alone the bigger
Right.
payments that could possibly happen. And with premiums climbing year after year, and we're reaching a point where some home buyers simply can't afford coverage. What does this mean for housing stability moving forward?
Yeah, we really are. And in many areas of the country, they're really dealing with the ramifications already. I saw a study, I think it was last year, from an insurtech platform, Matic, that showed that roughly two-thirds of homes are underinsured, mainly because
Wow.
the coverage amounts have failed to keep up with rising premiums. But this insurance rate, it's projected to keep climbing year over year unless we take action. And of course, that has ramifications for broader housing stability, like you mentioned. I think back to last December, there was a Senate Budget Committee here in DC. They had a hearing where a number of experts testified on this issue. And they noted that as more people become underinsured, you're going to see property values decline. Some properties will become unmortgageable, and that could lead to systemic risk to the overall U.S. economy. Given a potential wide-scale decline in home values, especially in areas around the Gulf, around the coast, or in wildfire-affected areas.
And you mentioned wildfire affected areas. When we think of rising insurance premiums, the number one thing that comes to my mind are natural disasters. That's kind of what
Yeah.
we see of what skyrockets the prices in the first place. So, with the latest wildfire season that just happened in California and the recent devastating impact that hurricane seasons have brought us, how are we seeing recent natural disasters reshaping the way policymakers think about risks and insurance premiums?
Yeah, I think this has really affected their mindset in two main ways. So, first on risk, they're realizing that natural hazard risk is much more widespread than previously thought. Flooding isn't just an issue on the coast. We've seen record amounts of inland flooding and riverine flooding from central Texas up to the mountains in Vermont. Wildfires aren't just a California problem. We're seeing them pop up more frequently east of the Mississippi from the Carolinas up to New Jersey. You see Tornado Alley keep moving farther and farther east every year, shifting into states like Ohio and Tennessee and Alabama. And most homeowners across the country, they face a complex risk profile. It's not just one or two potential hazards you have to look out for. Someone living, let's say, in eastern Missouri, for instance, might face tornado risk, wildfire risk, hail risk, riverine flooding risk, all of which have to be considered when you're taking on an insurance policy. So that's one thing that policymakers have been looking at. I think second, specifically on premiums, I think a lot of policymakers are starting to realize the importance of insurance premiums as a price signal. So as we've expanded, building over the past several decades, we've constructed homes in areas where, simply put, we should not have built homes, whether along the Gulf Coast or deep in the wildland urban interface. We're migrating into areas of higher risk. And that's a big problem on a number of fronts that policymakers have to deal with. So I think that we're seeing some of them, mostly at the state level right now,
Right.
saying, yes, we want to alleviate these price concerns for our constituents, these monthly insurance prices, but we also want to discourage relocation or new development in these high risk areas so that more people aren't paying these high prices in the future. So having insurance costs that accurately reflect the underlying risk can really help in that effort.
Right. And like you said, just because you're not necessarily on a coastline or, directly in Tornado Alley doesn't mean that you can't face some sort of natural disaster and therefore your rising insurance premium. And that kind of brings me to the next question, what you mentioned there about policymakers. Are they beginning to look at this from a individual level, or is it more of a community level that they want to take action with?
Yeah, so thankfully they're really looking at both. We know that natural disasters do not respect property lines. So while it's important that every homeowner does what they can to harden and protect their own property, resiliency planning efforts have to extend to the broader community. So, kind of as I mentioned, most of these conversations are happening at the state and local level, especially in areas that have dealt with large scale natural disasters over the past several years because those elected officials have seen firsthand just how important resiliency measures can be. So,
Right.
at the local level, these efforts largely fall to community planners, zoning boards, and other individuals or offices that might have a role in the physical design of a community. So one example of community resilience that we mainly see out west would be creating like a fire break, also called a fuel break, by thinning or removing flammable vegetation around the outside of a community to decrease the risk that an ember from a nearby fire could ignite a home. So that conversation between local officials and the developer occurs during the planning and zoning processes, and it's a perfect example of how local governments can increase resiliency. Unfortunately, many of these actions can be really expensive, oftentimes beyond the
Right.
capacity of municipal or county budgets, so they really need financial assistance. We've seen some cities have success in recent years using municipal bonds to raise money for some of these public infrastructure projects, but there are other sources of funding, which brings me up to state governments. Uh, every U.S. state and territory has its own emergency management department. While most of these are focused on post disaster recovery efforts, many of them are starting to turn their attention and their budgets to pre disaster mitigation efforts. And we
Okay.
really need to see, yeah, we need to see more of that. So
Yeah,
one,
absolutely.
yeah, one great example would be like a state creating a retrofit grant program for homeowners to access. We've seen some really amazing success stories over the past couple of years in this space. I think the most well known of them being Alabama's Fortified Home Program, which provides homeowners up to $10,000 to mitigate against wind damage, which has been a huge success. And we've seen a number of other states replicate that program. Again, we just need to see more of it.
No, absolutely, because even Cotality data shows that homeowners that take the precautions to mitigate their properties usually end up paying less over time with insurance
Yeah.
premiums. But at what point does that really become the sustainable option? Because making your homes resilient doesn't mean it's going to be a cheap process. That can also add to your budgeting at the end of the day. And when you're talking about building homes specifically, a lot of developers and builders are now shouldering the costs to make sure that they are putting in proper mitigation resources to these homes. And a lot of the times that cost gets trickled down to the homeowner. So, how can the government help alleviate the increasing burden of costs?
Yes. So there is a role for all three levels of government to help bring down these costs. Starting at the local level, municipalities can help by reducing some of the soft costs associated with new home construction. These would be things like, local zoning ordinances that dictate architectural styles, exterior features, even sometimes the specific materials that can be used in the construction process. Unfortunately, not every town has updated their zoning laws to account for some more resilient materials or
Yeah.
landscaping practices that are designed to reduce risk but are fairly newer practices. And when those local zoning and land use regulations aren't really conducive to new home construction, the costs for developers can pile up because the timeline gets longer. So if the developer has to apply to rezone the property, they'll need legal assistance for that, either hiring a local firm or using in-house resources that could be spent elsewhere. If the developer owns the land, they may have to pay property taxes while the home is under construction. So for every month this process is elongated, their bill gets higher.
Right.
Or if the local municipality tells them that their initial plans need to be revised, the developer may have to pay architects and engineers multiple times over to amend the designs and resubmit them. So updating these laws to provide builders with more flexibility to incorporate resilient designs and materials would be really helpful, and it'd save developers a lot of money and time by not having to apply for variances or special use permits that would allow them to build a more resilient home. So that's something that can happen at the local level. At the state level, a handful of states have found success providing grant programs, like I mentioned, the Alabama program. These help provide renovation costs to install like wind-resistant roofing or storm-proof windows, things that often exceed family budgets. So some states have had a really great success providing those programs. And then finally, the federal government. They, I believe, have the most important role to play in this effort, and that's to provide funding. The cost to retrofit our entire country are well beyond the capacity of all of our state and local governments, working in tandem. It's going to require a massive investment from the federal government.
And we're talking a lot about these costs, whether it's going to be the rise of insurance premiums, whether it's going to be from the homeowner's pocket or the builder's pocket of making a home resilient. At what point do we have to ask, is this beneficial? Are all of these costs worth it to do this to your home?
Yeah, no, I get it. That's a good question to ask. I will say that study after study have shown that upfront resiliency investments to prevent or limit damage, they pay for themselves multiple times over compared to the cost that you would have paid to recover without those measures implemented.
Right.
So I think we've seen a lot of those numbers, ranging anywhere from like, every $1 invested in resiliency leads to $7 in savings post disaster. I think I've seen that all the way up to like 12 or $13 in savings post disaster.
Oof.
Yeah, and I say this knowing full well, upfront costs are still going to be huge. I will say this is a personal, thought of my like. I do think that we will need to spend probably hundreds of billions of dollars over the next decade plus to actually tackle this issue. And I know a lot of people might balk at that number, but it's still a drop in the bucket compared to the amount we're spending on post disaster recovery efforts because we weren't prepared beforehand. So, I grew up in the foothills of Western North Carolina, so I've been paying
Mm.
particularly close attention to the recovery process following Hurricane Helene. Right now, NOAA estimates the total economic cost of Hurricane Helene to be roughly $80 billion.
Ooh.
That's just for
Yeah.
one storm. Last year alone, the U.S. had, I think, 27 confirmed disaster events that each exceeded $1 billion. I've seen
Mhm.
estimates, a range of estimates, that the combined cost of all of those disasters, again, just in the calendar year 2024, is somewhere between 250 to 300 billion, which, if anything, I think is an underestimate because we're still recovering from those disasters. So those
Right.
those costs are still growing. So yes, the price of retrofitting is high, hundreds of billions of dollars, but the cost of doing nothing is still exponentially greater.
Right. And whether it's pre or post, there are going to be costs that are going to be footed.
Yeah.
And like you said, what happened in Asheville, North Carolina, and really around that area, a lot of those people didn't have flood insurance because,
No.
like we said earlier, not living directly on the coast, you're thinking, oh, well,
Right.
I'm probably okay, but storms, they just go wherever they please.
Right.
And we know that moving forward, there's going to be more houses on the market. There's going to be more people that possibly want
Yep.
to move to an area that they have to think about these things. But what do you see the long-term implications of the housing market being if insurance premiums rise the way that they are?
Man, yeah, again, I'll focus on the importance of the month to month cost for most homeowners. That's how they budget, that's how they get paid. And so if these monthly costs continue to increase, we're going to see increased delinquencies, especially among low to moderate income homeowners who are already struggling. Theoretically, in like a healthy housing market, you would see lots of like downsizing or just like migration within a city or within a county as people try to find more affordable homes elsewhere. But the problem is we have an historic lack of supply combined with high interest rates, which has created a really stagnant market with fewer and fewer sellers. People are not moving. So these homeowners who are facing high insurance rates and might otherwise look to move, they just don't have many options right now. I expect a lot of them might turn to renting as the cost of homeownership just becomes too great if they can find a seller to buy their house. Because the other most likely option is getting behind on payments and becoming delinquent. So,
Right.
yeah, so I think, long term implications can be quite dire if we don't, start investing in those efforts right now.
Well, let's hope these efforts start ramping up a little bit so we can possibly see less
Right,
delinquencies in the future. But that
right.
is all I have for you today on the plate, Russell. Thank you again for taking the time to sit down with me, and very much looking forward to having conversation in the future. And hopefully, we're talking about insurance premiums not escalating and what people can do about that. But thank you again.
Of course, great to talk to you, Allie.
Thank you again to Russell for joining me on Data and Context, and thank you guys so much for listening. If you haven't already, go on ahead, drop a comment down below, hit that like button for me, and be sure to subscribe. That way you guys are completely in the know.